Welcome, everyone. So, who out there loves innovation? Who? How many of you? Everybody? Who loves the bank? Who wants to build the bank of the future? Everybody here, I hope. Right? So, why are we here today? What's the purpose of our meeting? We all are participants. We're all on the same ship. We're all on the same boat. And we're all together helping to build the bank of the future. And this morning, we're going to have what I guarantee to be a lively discussion about building the bank of the future and seeing where banking will take us. Where are we going? And let's jump right in. Now, who here loves Jack Ma? Everybody loves Jack Ma, right? And we all wish we had a private airplane. And maybe next year, Mayda, you can come out on a motorcycle like Jack Ma did for one of his meetings, okay? But Jack Ma said something very, very interesting that I'd like to start with. He made a distinction between fintech and techfin. Now, my first question to the group, and I'm not going to pick one of you, I'll let you decide who wants to go first. But my first question is, techfin, is that something real, or was that very, very smart marketing on Jack Ma's part? Is there really a distinction between fintech and techfin? Who wants to go first?
We'll let the ladies go first.
Ladies go first, okay?
Okay,
Annie, you're elected. You're going to go first.
大家好. All right, so I come from Singapore, and we are known to be like a global financial hub. So for a lot of us from the industry, we are actually finance first. So I'm actually an ex-forex banker. So I trade currencies. So if your core is largely finance, and then you are transforming now and looking towards digitalization, you need to adopt technology. So I think if you're finance core and you're looking at tech to enhance the experience for customers, you are more a fintech. So somebody will have to jump in and say, what's a tech fin? Raghu.
Yep. Look, I mean, depending on what side of the spectrum that you're looking at, it can be a marketing spin versus something that is really tangible. So the way I look at it is whether you're looking at things from inside out or outside in, that's the difference between techfin and fintech. Because for all practical purposes, we are a means to an end. From a customer's perspective, they don't really care whether it's fintech or techfin, because they're looking at us solving a problem for them. And as long as we start to focus a lot more on those lines, with technology underpinning a lot of what needs to get done, with removing friction from every interaction that a customer has, I think that's going to be the killer.
Okay, Mayda?
Okay, I will have a very different view. I would say that both are equal. Why both are equal? It's very much depending on, like, for example, they call me the fintech lady, but I work in bank, right? And bank, we are very much provide banking services for the customer. So regardless you use fintech or techfin, it's just a naming convention, but the technique to serve customer, it is the most important things that we need either one, but they are both equal.
Okay, so here's a question for all of us. Now, and we're going to start with Raghu first. Now, if we want to serve our customers and we're using technology as the primary means of doing this, do the big tech companies already have an advantage? Hey, many of us in the room are bankers. Me too, years ago. I started my career to be the best banker I could be. Annie wanted to be a banker. Mayda? How did you start? Were you a banker when you started? No, you were a tech person. Okay, so you were a tech person.
You were the two tech persons.
Two tech people, and Raghu, you were a tech person too. But the point is, if you are a tech company, do you automatically have an advantage over banks because you, being the company, is a master of technology?
Yeah, so I think the question, the way it is phrased is probably interesting, because if you start to look at anything to be successful, you need two sides of the coin to be valid. So for all practical purposes, technology and the product go hand in hand. Now, yes, the perspectives are different. today and for the last 20, 25, 30 years, everything that we do runs on code. So is it the right code for all practical purposes? Maybe, maybe not, because solving that end user problem, so as a geek, I am very agnostic to a lot of real world problems, and I need a lot of help and guidance from people around me to help me make sure that we are solving the right problem. So most of the times, when Mayda said it goes hand in hand, sometimes we are so focused on solving a problem, we don't really know whether we are solving the right problem. And I think that's the skew that I would always focus on as an engineering first focused organization.
Okay, solving the right problem. Annie, we've got...
Actually, okay, so I think the banks of today do have to wake up. So I didn't start off as wanting to be a banker. I was a banker, then I decided I wanted to do my PhD. So I went and do my PhD, which stands for permanent head damage, all right? So, but essentially, I think the big tech companies are the ones that we should be looking at. So I think you actually said, do they have huge capacity? They do. They do have tech capacity. And they have a direct channel to customers. So many of the individuals, if you are looking at the consumer market largely, many individuals are actually doing banking without going to the bank. So if a big tech company has the capacity with the technology capacity, the talent capacity, if they could work on the third T, which is the trust capacity, they can actually eat the lunch of many of our incumbent banks.
And that's a wonderful point, and we're in China, and all you have to do is to look at WeChat and Alipay. Now, these are clearly tech companies that got into the banking business and have cleaned up on the mobile market in China. They've done tremendous, tremendous work. Now, Mayda, I have to ask, you're a banker. How are the banks going to fight? How are you and our colleagues here all going to fight the likes of WeChat, Alipay, and maybe someday Facebook and Amazon in the Western markets?
I will answer that in a two ways. First of all is, if we put the history, we backtrack 1,000 years ago, paper money is not just invented because of we need a paper money. It's to solve a trader problems. The trader, they need to carry, say, 1,000 equivalent of the yuan, they have to carry 25 kilo equivalents of these hard, heavy coins from one place to one place. And that banking services, what they need is banking services. Trader, they have a customer pain. But the one that really solved the problems, not the traders, because at that point of time there's no bank, but there are two technology, today we call that emerging technology, printing and paper, that make available at that point in times where paper money was birthed 600 years before a paper money in anywhere else in the world. So tech company, they have the two, they may have a printing technology, they may have a paper technology, provide banking services, but you need to have a two emerging technology combined in order to solve the other vertical problems for the customer. Today, same things. Either we talk about WeChat, Alipay, or whatever, Facebook Pay or Amazon Pay, right? They are all solving customer problems. Our today problem is no longer on a distance that we travel, the proximity, but it's a problem that we solve in the digital world, which is many, many companies are not prepared for that. How are we going to solve something virtual that we can't see, and at the same time, a company that has been doing the same thing over and over for many hundred years, how are they going to transform? I think that is the thing that caught us off guard.
Sure. In 2008, there was a big financial crisis, and the banks all had their eyes off of technology. They were more worried about their financial stability. So if we look historically, we can see that banks may not have been focused on tech at a time when tech was booming and things like Uber, ride sharing were coming up. So if we look at the ability of a tech company to solve bank problems. Let me take this from another direction. When I go to the internet, I don't say to myself, tonight, I really want to go look at my bank website and check stuff out because it's a lot of fun. What I do, however, is I look on Amazon and eBay, and payment, what I do, the money that I transfer is not for fun, it's because I happen to be doing something else. Now, can we imagine a time when banks start to get involved in what are called platform services, where you not only go to the bank because you want to do your banking operation, but you want to do something else that would be enjoyable. Now, I'm going to give you an example of this. Ping An Insurance here in China. They also operate a large car sales network. So people go because they don't go to Ping An, they don't necessarily buy Ping An Insurance, but they have the app downloaded because they want to look at the car. Can we imagine a time when banks become more tech-like and offer platform services?
Yep.
Raghu?
Richard, every other Wednesday, I do look at my account. I log into my banking account to see if my salary has been paid in. So that does happen.
Okay, so that's the only time you actually log into the bank site for fun, is to check that you've been paid.
No,
okay.
I think I would call it healthy paranoia rather than fun, but that's where we are. But look, I mean, with changing times, we have to adapt and change. So I still go back to the foundational thing that we started this conversation of. What are the problems we are trying to solve for, right? So the world is evolving and changing, and are we ready to solve the issues that our customers want us to solve for them? Yes, we don't always have to focus on the cool and sexy stuff. We service a broad spectrum of users, from people who cannot walk to the bank, people who can't hear and see, people who need help. So we are a part of the community that is important, and I think over a period of time, we need to build that and invest in that relationship with our customers, trying to understand what are the problems that we're trying to solve for. Yes, no one would log on to a bank account to see, hey, when it's my next Netflix binge. But at the same time, there are other things that we need to start to do and help people transact or go through those journeys. So as an example, a vast majority of the people here who are significantly younger than most people here on the dais, they're not financially as focused as we are at our stages in life. And based on the research, based on the stats and a number of other factors that are being shared, there is a significant void in terms of helping people manage their finances. And when I say helping people, even that spectrum from 13 years old on to about 40, 45, people need a lot of help, and there is nothing more personal to people than their own money. So solving those problems and getting ahead in that curve with the kind of insights that we have and investing in those areas through technology is going to be one of the key areas of focus.
So solving people's problems. Now I have a question.
Yep.
Are we doing it fast enough? Now, I don't want to speak generic, I don't want to speak specifically to ANZ, but when we look at banks, let's look at China banks overall, okay? They were shocked by the campaigns for WeChat and Alipay in the banking space. They were overwhelmed with what happened to them. And in the West, we've got banks, some of which are fairly well digitally positioned, and others that are looking at the digital threat and don't know what to do. So Mayda, not just from an ANZ perspective, please, but are banks overall doing enough to go digital and combat the threat of the tech players?
I would say that there's no speed will define fast or slow. It could be a technology that comes earlier that is may not relevant to the point of times. If smartphone arrived before 2017, I don't think that our customer or any of the customer in the world ready for that. That is a PC era. And it took 20 years from a PC era to get into the smartphone. From a smartphone onwards, and now every 2 years, there is one transformation. So in terms of the banking services, we have a good 40 years. when you first have I would say a credit card at I think in year of 1950, we have the first diner credit card. From there, then we have a ATM machine. 20 years, no innovations. And then become a PC era. Internet started to boom. 20 years. But now, we are on the acceleration every 2 years. Today, we are talking about blockchain. And tomorrow, we're talking about 5G. And after 5G, it could be something else. Can bank adapt fast enough for all this technology? I don't think that we have a definition of fast or slow, but it's about open and close. That's the reason why we say today conference, we call it open and share. How open are we to adapt, and how open are we to share?
That really is interesting, because that little bit gets into where we're going next. Bill Gates was famous because he had one of the greatest quotes ever about banking. And he said, people need banking, but we don't need banks. So that goes to the next issue. Do we really need to have a physical bank anymore? And is all this digitization leading to the point where banking is faceless, seamless? It's not something where you have to go to the platform to do. It's not something where you have to physically go to a bank website to check that your salary is there. You just know it exists. Are we getting there, Annie?
Not yet. And I think I want to tie your earlier question to this next question. I think you cannot talk about being the bank of the future without knowing who you are. I don't think you can be the bank for everybody. And I think it depends on the segments of the market. So you might be a very strong institutional corporate bank in your domicile country, and then you have a different platform working with different partners when you are doing your overseas presence. So it really varies. But at the end of the day, while we may not need to go to a bank to do banking services, the world of tomorrow is social. So you can be the bank for the individual, the bank for the business or enterprise, or the bank for the community. And you will therefore have to find for yourself who you are and what you want to be. So yesterday at the Tianfu Software Park, I was amazed when Mayda showed me the XW Bank, which is the digital bank and in Chengdu, and they could make funds available to the unbanked, the unserved. And they're not cannibalizing or eating into the pie of the domicile banks at the moment, because they could take the excess funding from the big banks and they could make that available to the unserved. And you could unbundle the credit risk because you could outsource the credit profiling to companies that we've also met. So today's banking can be unbundled. It can go to different partners. And many, many banks are now looking at consortium of like-minded partners. So who do you have in your ecosystem? And how are you serving your clients depending on who they are? But so many offline companies and so many online companies are going offline. Why? Because humans are social creatures. We need that interaction. And it's not just about services. We love the idea that we have a community of like-minded people that we are all communicating with.
So Raghu, this brings up a really interesting point. You talked about solving customers' problems. Yep. And one of the things that Annie mentions is that your customer is not the same person. It's multiple people. And now with the digital platform, you can have a digital presence for your bank that is one thing to a 15 to 25-year-old and another thing to a corporate banking relationship. So it's not about building a singular digital platform so much as building something that can change its face. Remember the Chinese face changing, where you pull the silk off, right? So is this where we're heading? Are we going to these virtual banks that can be or appear to be anything they want to whatever customer they're targeting?
I can tell you that this is where we are today. So we as a bank have serviced different segments of the society for decades. And I think that is continuing to evolve. The way we service the customers is going to change, right? So as an example, I've always believed that we are a means to an end, No one wakes up in the morning and says, hey, I want to buy a cup of coffee because I have a certain credit card or debit card or WeChat Pay or Alipay. You go in to service a need, which is to get a cup of coffee. The same thing applies in the evening. When you come back home, you want to watch something on TV or shop something. That's something that is driving the need, right? So as long as you start to facilitate and make it seamless through a course of time, then we are in a good place. We also, as an organization, have a social obligation and a legal obligation to do it right. So I think a lot of the balance and change will continue to, boil the ocean in this scenario.
Okay, but it's a tough road, right? You have to make a digital platform that can be a chameleon,
Yep.
to be many things, to change its colors and its shapes.
Yep.
Mayda, is your team up for this?
I would say that is thank you, Raghu. I would say that it's customizations. When we talk about the future of the bank is social, if we look into the society transformations, we have transformed from tribes to institutional to markets, and today is a network. In the network community, one of the very significant features is social. Social, every individual need customizations. Every product, other than banking services, any product that you can do customization to your needs, that product fly. Same for banking services. If we are flexible enough to do the customization to serve the different phase changing.
Sure, and socialization. And if we look at WeChat, that was their golden moment. They took a social platform and turned it into a financial platform, which was really a breakthrough in digital banking services throughout the world. Nobody had ever done that before. But are we happy? Is it enough to have simply a virtual bank? Are we done? Are we looking at a world where, hey, we're going to close all the branches, we're going to go completely virtual, we'll have 4 different interfaces depending on your age group and your needs? Is that enough? Is that where we're going? And Annie, you're looking at me and you're already saying, no! Go ahead, let me have it.
So I think we are in transition. I don't think even the future generation want to just have a virtual bank. And a classic point of view is Singapore, we are 3rd generation country. So we have our independence 54 years ago. And my mom, when she was alive, would only go to Maybank because she's Malaysian. And so for her, it's the legacy, the roots, where she came from. So she had a trusted relationship. And, she would insist, because Maybank doesn't have a lot of branches, she would insist on going back to where our first home was, and that's the Maybank that served her. And even though the banker may have changed, she felt very good going there. And then having the ATM card, which says Kawan Ku, which is saying, my friend. So you see, the way you resonate is a relationship. And so even if you go through moments of life as a young person, at the different points in your life, when you need a home loan for buying house, when you have your first kid and you want to open a deposit account. So although a lot of it can be virtual, it's also within the family. So the family unit is a very strong unit that influences your banking partner. So I think the way things are going, our young people, the generation to come, even with technology at their fingertips, I think they still want a point of reference where the life for them has roots, has a legacy, has sentiment, has tradition.
So that really speaks to Mayda's concept about tribes. Your mother loved her Maybank, that particular bank, because she felt part of that tribe. Now, if we look at a younger generation, what's their tribe? And now, hold on. If you look at the United States right now, we've got a tribe and a new financial entity entering, and that's Apple. Apple has a credit card offering coming up. Not a bank, but still a credit card. And if young people feel that that is their tribe and they want that association, what does that say for loyalty to your existing bank?
So Richard, young people always had a tribe. So if you go to Pinterest, if you go to social media, if you go to Facebook, if you go to Instagram, you'll always see all of those cool things happen. So all of us want to assimilate. And one of the things that gives us gratification is recognition for some of the things that you do. So unlike Apple, we as a bank have always, and Apple is not the first and won't be the last. So there are a lot of large organizations like Macy's, you look at all Best Buys of the world who've come up with private label cards and in partnership with larger organizations. So even Apple, for all practical purposes, jumped in with Goldman Sachs to do this. So partnerships are always going to be pivotal in terms of how some of these problems are going to be solved. Again, when Apple jumped into this conversation, that credit card is solving a niche issue, which is how painful is it to look at what my transaction history looks like, where am I spending a lot of money on, and things on those lines, which are now expected to be par for the course by a lot of the younger crowd. And we are in the process of firefighting most of the time, as we talked about the financial crisis, the regulation, and a bunch of other things. But at the same time, it's also a function of organizational maturity. We have been fortunate at ANZ to have kick-started this journey a couple of years ago with Shane coming on board and looking at transforming the bank from ground up. So if I would be very bullish in terms of how we are looking at a lot of these things, and healthy paranoia. If people take one thing away from today's conversation, never be happy. That's important. Paranoid. Healthy paranoia is good.
Healthy paranoia. Healthy paranoia. Well, hold on a second. There's a lot of paranoia. There's a lot more than healthy paranoia. There's some serious paranoia. Now, if we look at Hong Kong market, if we look at the Australian market, and of course, if we look at Singapore, all three are in the process of opening digital-only banks. Hong Kong launched the first 8 licenses just within the last few weeks. They dropped the last 4 of the 8. Singapore has the new rule on the books. It hasn't been approved yet. And in your own home market, now I am speaking to ANZ people, we've got Judo Bank, the first all-digital bank in Australia. Now, I'm going to jump on something you said in the last answer. You said, well, Apple Card solves people's pain points in looking at balances and observing what's happening with their funds. If Judo in Australia market is able to do even better than Apple or somehow do better than the incumbent banks, is this a real threat for you? Are these digital upstarts able to start with newer technology, better visual interfaces because they're starting fresh? Is that a threat? Mayda?
Today we will have Judo, tomorrow we'll have someone else. It will always have someone else in the markets. And it is about how long. It is like a marathon. It's not about you are just here for today to serve the customer. The customer, they have an entire life cycle for them to complete. To trust is who that we put our trust at. So it could be Judo for the time being, but it also could be someone else that we put our trust in. Because we are always a human being, a network community, where the trust link everyone together. The network can't be present without trust.
So you have to have trust. And what you're claiming, and I'm going to be a little bit provocative, thank you, Annie, is that the trust level for incumbent banks is high for now. Now, let's look to China. China had incumbent banks, and as soon as WeChat and Alipay offered an option, please help me, how many millions ran to use these new digital services that are 100% digital, no bank, no branch, and no historical trust, but they went over big. So, Raghu, Judo Bank and 3 others are threatening your business in the next, it's 5 years from now, and you're looking out and Judo Bank has millions of customers. What are you going to do? What's the solution?
I don't know what the solution is, but healthy paranoia is a good place to start. The reason why I say that is it's important for you to be aware of what your competition looks like. That is a great starting point. And then look at whether your organization is healthy enough to compete in that same framework. And then look at what are the gaps that you have to bridge to get to a place where if you are not competitive, but get to a place where you can be. And being self-aware is a great place to start. So if it is judo or whoever else, I think starting off on a great benchmark where you understand the problem that you're trying to solve for and tying it all back to the same thing again is really important. And once you do that, if I was a betting man, I would always bet on the incumbent who is a lot more aware of the challenges that they need to solve for and have the deeper pockets and experience to solve for it. So the spectrum is very diverse depending on the health of the organization and where you are in that curve of maturity. And for us, we are fortunate that we started off on that curve a little earlier. We are investing in the right places in terms of not just talent, compliance, but more importantly, doing the right thing by our customers.
So you said a really interesting word. You said that you were a betting man. Now, if we look at China Tech, if we look at the WeChats and the Alipays, they probably are the most sophisticated digital financial platforms available right now in the planet. Now, Annie, are you a betting woman? Are you willing to bet whether WeChat and Alipay are going to actually break out of China and go to other countries? And if so, how are local banks, which are digitally slow, going to compete with the very best in the planet?
So Richard, you're holding a book, and your book talks about innovation. I think having competitors are great because it wakes people up. And I think it brings them back to who they are. So I don't think you can be fearful, because paranoid is great because it keeps you on the edge. So for me, at this point in time, I would bet that the banks do have a lot of benefits, and it gets chipped away. And every time they get chipped, they wake up and they responded, and they start having their tribes, their hives, and they start thinking, what else can we do? Not to block, but to add value, to bring our customers to the next stage. So to be fair, I am also an advocate of change. And I think the more you have diversity, the more you have cross-functional teams, people from different cultures, cross-border teams, it brings that element of innovation to the new heights. So I'm also advising a robo-advisor, so I declare. And it's a group of young people, and they came out from Zalora, and they break out from there. And the CEO, the founder, actually went to banks to look for investment opportunities and keep getting unit trust at very high fee, 1%. And he says, cannot be. We should be able to do better. So they form Stash Away, which is the robo-advisor that I am serving on the advisory committee. And they have a license. So in MAS, the Monetary Authority, you need to apply, and you need to put capital at risk, 3 million Sing, in order to get a license, because you're reaching out to individual retail. So if you can earn trust and gradually build it up, it may be able to hit some of the avenues that the banks used to have. So in monetary economics, why did we have banking? Why did we have currency? As a unit of account, as a medium of exchange. So payments is where we are getting a lot of the medium of exchange role being hit, and as a store of value. So these are the different roles, and banking services are playing the different roles. So you may find some parts of it chip in different segments and in different markets, but not at one go at the moment. So
banks are going to have their franchise or their businesses eaten away a little bit over here from the foreign exchange group, because I can do foreign exchange on an internet platform more cheaply, a little bit on the payment side because I have a new WeChat account in Singapore because WeChat has now launched in Singapore. Still a role for the primary banks, but again, their profit margins are starting to be chipped away at. Raghu, I see a smile. The betting man has a smile. Let's see.
So words are very important, so I'll clarify. So I said if I was a betting man, so I'm not a betting man.
Oh, I thought you were.
So just on this perspective, so I had the fortune of visiting China for the first time a couple of years ago, almost 2.5 years ago. And when I came here to Chengdu for the first time, I did not really need any AML, anything to use my WeChat Pay and set up. And then a bunch of my friends ended up coming down here. So now you have to have a mobile phone, you need to have a bank account, and you have to have a number of other things in place before you can use WeChat Pay, as an example. It might not apply to a lot of incumbents who are already using it, but there is a cost and enforcement of the needs from an AML perspective, from a compliance perspective, that will start to become a lot more relevant for a lot of the tech startups and tech-based companies. So the playing field is going to become a lot more simple and stable and very similar to a lot of us. So Facebook, as an example, with everything that you see and hear on the news, has had a lot of privacy issues. Now, would that be the same for everyone else? I don't know. But what we are really focused on a lot is to start off from a very good compliance and other privacy related aspects to be checked off before we can start off on embark on other things. So there are a few things that we are responsible for within the organization, which we'll continue to do.
Sure, and that goes to the whole point about building trust. And specifically the example of Facebook, they've lost so much data that the trust for the institution of Facebook is very low by many users, including me. But we've talked about digital banking, we've talked about fintech, and we all agree, I think, because we're here for a conference on this, we all agree that going digital is great. So every day that I turn on my computer and I read something about banks and fintech, I read about transformation, I read about going digital, I read about another institution setting up an innovation lab. Are these buzzwords? I mean, you know, how do I know whether the institution or an institution is actually doing the hard digital work that's required, or are they just play acting? Is it something that they just talk about but don't really do much? How do we know? Mayda?
People. It's very important that our people ready for transformations, for digital, for anything that coming as a new into the day-to-day work, professional work, or their personal life. And it's very important because if an individual is not transformed, is not ready to transform, the work that the individual doing will never change. It will still doing the same old thing. So if you want to talk about digital, we want to talk about transformation, first is a people mindset that first need to get transformed.
Annie, I'm looking at you. Are these all this? Are these?
Okay,
how are these things different?
Oh, totally different. I'm partly involved in one of the clusters. So Singapore government has put in place 23 industry transformation maps. And 23 is not a magic number. 23 industry segment accounts for about 85% of our GDP. So we need to transform industry by industry. But as of last year, they have now clustered the industries into 6 clusters. And I'm involved in the wholesale trade and connectivity cluster. And Mayda is right. In that cluster, we have an ecosystem of big MNCs, the Unilever, the Maersk of the world. But we also have small, medium enterprises. And Rolls-Royce was telling me in an interview that they procure their parts for Rolls-Royce engine from 200 over small, medium enterprises. So I cannot transform the trade and connectivity cluster if only the big boys are the ones that are changing their business models, and they have all the technology nerds, and they have all the digitalization if my small, medium enterprises are not digitalized, have not even used e-payments for cross-border trades. So this is why transformation is the big word, and we have to go down to each of the minute members of the food chain, the whole value chain, to bring in digitalization. But that cannot happen automatically. You need talent. So every time when you talk about trade transformation, I would say I need the 3 T's. I need transformation, I need talent, and I need technology. Talent have to come hand in hand with technology. So we definitely have a lot of work lined up for us. So it's great that we have this conversation, because digital is only part of the whole transformation roadmap.
So digital is just a piece.
A piece which is very critical. We are at the right place at the right time with the emerging technologies to help us. So if you can connect the dots and drive the change and adopt a whole new business model, you can get there. But it takes work, hard work, deep research.
And would I be correct if I added one thing to this? That transformation is about a technology change, but also a managerial change, and how the mindset of managers works. Everybody's, and Mayda, you want to pick up on that? Because that's a really big theme, is that transformation is is about how we all think about our relationship to digital. Raghu, do you want to pick up on that? Sure.
I can. Look, I mean, we've transitioned from a command and control model, which was what the rest of the world was for a long, long time. That's how I grew up. That's how I was taught in universities and schools. And as I did my MBA, that's the whole structure, and that's how you think. Now we've moved to a construct where it's a knowledge-driven economy. And you need to start to transition decision-making to where the knowledge exists. And that is not an easy transition for someone like me, because I've been schooled for a number of years in a certain model. And it is something that we are constantly pushing ourselves to start to unlearn and relearn, and start to trust the people that we have around us. So these days, it's very hard to delegate control, because now you feel that, oh my God, I don't really know what's going to happen in this scenario. So you need to start to do that in smaller pockets with the least amount of blast radius, so that it can start to help fester an organization that is phenomenal.
So digital transformation, a big, big topic. Now I have a question, the same question for each of you, and we're down to about 2 minutes, so time limit for each of you of about 45 seconds each. Ready? How much do you agree or disagree with this statement? Your bank is now a technology company. Go ahead, Mayda, we'll start with you, Rahul, and Annie last.
Yes, every company is a digital company.
Well, that was even shorter than 45 seconds. So every company is now a digital company, whether they want to be or not, including banks. Raghu, or do you have more? Please.
It's no longer a choice because of the technology that make available to a day-to-day lifestyle. So lifestyle and digital and technology are all combined into one. So getting digital or moving into digital is no longer a choice. It's a must. It's a mandate.
Yeah.
It's a mandate. Raghu?
Simple answer to your question is yes. We have always been a technology company, though we didn't realize it. We've always been about people, communities, and tech. So those 3 things are going to drive the future of what we are going to look like.
Annie? Let's have it.
All right, technology is an important driver, but just now when you have Mr. O welcoming us, we still had Scarlett and that young man. So I think the human face is still very critical. So I would say yes, with the caveat that don't keep going and think technology without having the human element. I think that goes hand in hand.
So we're looking at a brave new world with technology, and you just said something interesting, not to go over time, but what do you think about this statement? Those banks in the future that can master digital but still give it a personal touch, they will be the leaders in the future, because you don't want to simply throw away the human element, right? Are we agreeing in this, or?
Yes.
Definitely.
Yes.
So,
Hard nut to crack, but whoever does that will be one of the big dogs in the yard.
and perhaps we can use Mr. O to help us with this.
Yes, we will.
Okay, our time is up. I'd like to thank everyone for a fantastic discussion, lots of interesting thoughts, and we're all transforming, we're all innovating, and we're all going digital.